In our consumer alert this morning, a slew of new housing data has some experts predicting that the spring housing market may be very cool.
Dana Olick has the details from Washington.
There was some good news in housing to start this year. Buyers came back, signing more contracts to buy existing homes than in December, according to the realtors. And the gains in home prices are shrinking to the smallest in 3 years.
We're seeing stronger buyer demand, but it's not as if people are willing to pay any price to get a home, which is what we saw at the beginning of 2018 and for the past 4 years before that.
And buyers are being helped by lower interest rates. The 30-year fixed is at the lowest in a year, and that boosts mortgage demand. Applications jumped noticeably. But there was also some bad news. Home construction fell again in December, and what builders are putting up is not in the entry-level category. Home affordability is now at the lowest in a decade. Even Warren Buffett, who has been bullish on housing, waved a warning flag.
Single-family construction is really, I think it's been quite weak compared to what you would expect after 10 years of recovery and with the stock market, quadrupling from the lows and unemployment at 3.7%. People are just making different choices.
Or the choice is being made for them. Today's home buyers are facing one of the priciest markets in a decade. And while the fundamentals behind them are strong, like job and wage growth, you can't buy a home if you can't find an affordable one.
I think the spring housing market will see some signs of a rebound, but it'll be slower than expectations, slower than what home buyer demand would suggest, and that's because housing has these structural headwinds. They're not going away, even when interest rates are going lower and even as wages are going up. The structural issues are on the supply side.
And those issues will not be solved by spring. Diana Olick, CNBC, Washington.
The biggest supply increase is in residential real estate, and that was in the nation's 50 largest metropolitan markets. The West Coast led the way, with San Jose seeing a 125% increase in the number of listings. That's likely because more pricey listings are going unsold and piling up.